All right, we are live. Good morning, guys. Welcome to today's episode of Market Check, brought to you by Because Bitcoin. It is ETF week, right? In the words of the great, maybe the late great Barry Silbert, depending on your perspective of him, it is going to be a big week. Welcome to Market Check, guys. Surreal that we're finally here for ETF week. We've been building towards this week. I mean, it'll probably be officially on Wednesday, but we've been building towards this week really for the last 3 or 4 months at this point, but really as a space, we've been probably building towards this for many years. So very exciting to see what Bitcoin is going to do this week. I'm sure we'll get fireworks, unexpected, and maybe both directions. Who knows? I'm really looking forward to observing what sort of price action we've got coming today. But I'm Snorlax. You guys also know me as Tommy. I'm joined by Jackus and Dr. Will's Outlook. Welcome, guys. Hope you all had a great weekend. We were just talking about Dr. Outlook's weekend. He's having a bit of some construction issues around his house. Lots of noise he's had to deal with, guys. But real quickly, before we get cooking and sharing that big juicy alpha, we always appreciate when you guys smash that like button before we get started. And then because it's ETF week, y'all better smash that like button, right? Because we are streaming on a milestone week. Very exciting, like I was saying, but we will ask you again, I'm sure. And just because Max isn't here doesn't mean it doesn't mean that all of us are not going to bug you about the like button, because we all love when you guys engage and of course enjoy our content. I don't know if Jackus has any alpha today, but if he does, we'll try to set some sort of a benchmark for the like button today. But yeah, no, we did have a little bit of movement in Bitcoin over the weekend, right? It was going pretty much flat pretty much until Sunday night. And then all of a sudden we got some volume start to come in very late last night. Squeezed us all the way up to 45K. So now I would say it's decision time for Bitcoin, right? You going to go for new highs within this range, really break out of where we've been chopping? Or is this potentially the place where we look for a rejection and maybe a continuance of our range, right? Because so far it's been very consistent in the fact that whenever we've traded towards the range lows, they've held very strongly. We've had multiple leverage rinses within the range. We're still, contextually deciphering whether or not those are just leverage rinses before continuation higher, or of course, distribution. But very exciting stuff for Bitcoin this week. Some would argue that we're reaching a crescendo for the market, given that we have the ETF approval and how the futures ETF panned out in 2021. But also some would argue that we're just getting started, as we're likely to probably get lots of spot flows in from companies like BlackRock, from companies like Fidelity, et cetera. I mean, I don't know how many companies applied for the spot ETF, but I'm definitely intrigued to see the data that we get coming out of the first week of launch. I know that we're not here at the launch necessarily yet, but I did see somebody say that potentially the way that this might play for Bitcoin is it could be a buy the announcement, sell the launch type of scenario. And I think that could be an angle that I can get behind as far as the Bitcoin ETF. I think trading right now, this is a very comfy market right now to be holding spot. I'm going to maintain that. But for perps, trading this week, given the headline risk in either direction, is probably going to be a bit tricky. Wish I had more to add from the equities front this week, guys, right? I mean, we've kind of just been chopping in that market as well. But as a whole, I still think that equities are probably risk on into the middle of January. That is when we have that is officially the end of the supportive flows that we've had really since the middle of October that have propelled this run higher. But welcome, guys. Welcome. It is a big week, in the words of Barry Silbert, as I said. Would love to know what you guys are seeing in the markets, any reflections you have on the spot ETF as it approaches, and anything in between, guys. Welcome.
I do have some stuff here. I just want to point out that the cope is real right now. People are seething continuously on Twitter. It's absolutely insane. Like, look, I feel bad. I feel bad for a lot of people, right? I publicly posted my purchases. You guys can see one in the 16.8 range, one in the 25K range. So we said, I got screenshots of Will being bearish. Hey, I got screenshots of me buying things. I would say this also to add to the whole ETF thing. If it's a fake out or a failure, I'm even more bullish. And I know that sounds absolutely crazy because it's like, well, why would you be bullish at that? Because it's not a matter of if, it's a matter of when. And so many people keep on missing the plot on that one, right? They keep on, oh look, it's going to sell off again, guys. It's going to, okay, who cares? And the liquidity is going to keep building because again, it's not a matter of if, it's a matter of when, which means your 10K thesis, your 25K, 20K thesis, it's not coming to fruition. Capo posted today that it's going back down to 30K. Again, the cope is real on the timeline. It is real. Like people are just not understanding the support of liquidity here and the way that liquidity continues to support itself. And they're absolutely sleeping. They're sleeping on generational wealth, possibly, again, opportunity cost is massive here to not be positioned. I think if you're sitting there saying, well, I'm going to wait for a pullback, think about opportunity cost. What's your likeliness scenario? And what's your likeliness scenario that it hits your price target? Right? You have to consider those things. Again, not being positioned can be just as dangerous as being positioned. Because if you're buying SPY at 3,000, it's a lot different than coming in and looking at SPY at 5,000, right? It's two totally different scenarios, and now your opportunity cost is lost, right? You'll be like, well, I'll play this to catch up. No, no, you won't, because you never bought SPY at 3,000. You never bought it at 4,000. You never bought it at 4,500. How are you going to catch up? You don't even know what's going on, because if you knew what was going on, you would start positioning, right? And that's what I really come back to. I hate to tell people like how it is, but it's the continual of people that try to claim they know what's going on but haven't purchased a damn thing since the beginning of 2023, and are down bad against the market, right? In a significant way. If you want to look at deterioration through inflation, if you want to look at opportunity costs from buying positions, like most of the opportunity costs are going out the window, and it's only going to get worse, I think, for a lot of people.
Yeah, I tend to agree, Will. It's been a year that has had a lot of ups and downs, and I've kind of compared to there, but it's ultimately moved in one direction, right, which is higher. I've kind of compared 2023 a bit of to a megaphone, right, both in terms of what we've seen from the market on price. And what we've seen from a sentiment and positioning standpoint as well, right? We've had these ups and downs, and sentiment and like peaks and troughs, but what it's ultimately led to is just this trend that's continued to become more and more volatile and ultimately rising as the year has gone on.
Yeah, I don't see how people can look at this and look at 2023 and be like, I need to come in and be bearish here. Show me a market that's been bear market, bull market, bear market. I would love to see it, guys. I would love to see it. And yes, you may find anomalies, but it's the less likely play over the more likely play that this thing continues. I'm sorry, doesn't continue. Sorry, doesn't continue. Because I think so many people are missing the plot again. Like if you look at Bitcoin, for instance, we discussed this on the yearly chart, right? It's usually one red year, one bear market, and then three consecutive bull, right? And then one red market and three consecutive bull. The accumulation range is not difficult to understand. It's that now could we stay remained relatively ranged? Sure. But your opportunity cost again is still on the table, right? Why not why not play the likely play versus the unlikely play? Because Bitcoin has never went bear bull bear. So why are you playing that play? There's no history to support your thesis that that's going to happen. So again, it comes down to just looking at the patterns, understanding the patterns, and playing it correctly. It's not hard, guys. I'll give you guys a simple analogy, right? You have a box. It has three holes. One hole's a star, one hole's a square, one hole's a circle, right? They give these to monkeys, people. Okay, they give these to monkeys to test their intelligence. And you put the square in the square hole, you put the circle in the circle hole, and you put the star in the star hole. But if you're sitting there banging the circle in the square hole and telling me how it's going to fit through, it's not going to happen, right? You're making a pattern that doesn't exist. You're looking at these charts and you're like, oh, well, this could play out. It doesn't exist. Why are you trying to put the circle in the square hole? Why are you trying to put the square in the star hole? Like, come on, like this is like literally second and third grade, first grade, when it comes to just okay, what do I see? What is the pattern? What is like math class, right? You go to math class, and I'm going to talk simple math, right? 4 plus 4 plus 4 equals what? Equals 12. That's it, right? Why are you putting 14? Why are you putting 14? I know not everybody can count, but like, why are you putting 14? And again, it's not something, it's just math, numbers, patterns. It's not something difficult to play. Play the likely play. Go
I
ahead,
needed,
though.
I
I
needed
see.
my I needed my daily Will's Outlook analogy on a Monday.
By the way, guys, I have some real. By the way, hello everyone. Didn't really get to say that yet, but I have some. If you guys have been here on Friday, right? I have some memes that I made over the weekend, right? And if you guys remember the talk about Snickers, well, this is Will when he's
I need
offered
to
the
find that.
Snickers. This is Will when he's offered the Snickers. So you can either pick up the Snickers or draw 25. So this is Will. He doesn't he doesn't pick up the Snickers, right?
No, picking up the Snickers, man.
Oh man.
Oh shit! I need to repost. Do you got that on Twitter? You
Now,
gotta tag me in that.
I actually sent it in the group chat that we have on the market check. If you scroll higher, there's few of these. Like there's
Don't pick up.
listen,
Yeah, that
guys,
was good.
listen. Do,
That's
do,
funny.
do, do you see right here?
The Snickers is the retrace.
This was the Snickers. So if you sold, you legit picked up the Snickers, right? Don't pick up the Snickers. That's Will telling you. Don't do it. I have a few more of these.
Jackus, what are you kind of seeing in the markets this week, and how are you reflecting on this ETF as it approaches?
Well, I wouldn't pick up the Snickers, so that's for sure. But that's how people that sold here, they picked up the Snickers and they're thinking about it, right? So
I was muted. He said, "Why pick up the Snickers?"
apologies. Just what am I thinking about the ETF? Well, I'm just so tired of it, really. Just myself, but I'm just so fucking tired. Everyone just like ETF this, ETF that, and everyone just talks about ETF and nothing else. Man, just let it be over. I'm so tired of it. Like, can we just talk price, and stuff that's being developed or something? But like,
The,
why keep like,
the thing is, Jackus, is like everybody's anticipating this whole ETF thing to do something to price. Price is gonna
yeah,
rise regardless. You
yeah,
know, it like and retraces are going to happen regardless. Like it's almost like the FOMC discussion, right? FOMC mattered until it didn't. ETF mattered until it did. It doesn't matter anymore. Doesn't
yeah,
matter anymore. Retraces are going to happen. Rises are going to happen. But the market directionality is not difficult to see. The trend is up. You can play the retraces. You can buy. You can buy the retraces. Here's the thing: everybody will see red on the chart, but they won't. They won't buy a single thing. The
yeah,
second, your favorite dog coin, we'll say Pal with Hat, is running. Everybody wants to get on. They're like, oh, Pal with Hat's up 300,000%. Now's the time to buy. It's
yeah,
Will's
like, bro, what
Outlook with hat or with hat.
with that? It's like what like just use your head a little bit, right? Red is for buying, green is for selling, right? And it doesn't mean selling like your first green candle. It means those are the times you sell and those are the times you buy. When people do the opposite, it mind boggles me. It's like, why are you chasing? Why are you chasing? This is why you are losing, because you are chasing. Like, you don't understand the directionality of the market. You're trying to follow everybody else because you think you can get on the bus and just ride it for free. Guess what? No, the bus isn't free. It's not free. Just like the Snickers on your pillow in prison, that's not free either. You're paying for that. All right.
Yeah. So again, you've been offered the Snickers quite a few times on say. So
I still think Say is going to $1. I agree with you, Jackus. I think that was the low probably this weekend. Maybe you get some sort of wick to the downside. Who knows on ETF shenanigans this week? But I think the low is probably in on Say.
yeah, it really should. Like it can, like I think it, maybe fills this inefficiency, but low should be in, especially with this final sort of capitulation in this way. Whenever we get such wicks, retail doesn't really know how to play these, right? Like they look at this like what lots of retail guys do is that they'll say, "Hey, this is support, right?" And it's like that's really not it. That's not the support, guys. All right, so they do not really know, and when they see like price going down like this, they'll either sell and then look to buy lower, or really don't know. So I think this was the final like inside like capitulation, and then we should be holding this low, right? We shouldn't really be pulling over, because if we do, I think the trend is changing. As I've been saying, I think this was a pretty scary drop over the weekend, right? On many of these alts, they really retraced big part of the Bloody Wednesday week. We went down, on say we went down as much as basically 35%. That's like the deepest pullback we had this entire rally, right? That definitely does speak volumes. I'm not sure how much this was, but I do not think it was.
Yeah,
Yeah,
but you know what that is, right, Jackus? Again, it's liquidity
the
flowed in
Snickers.
to these alts. Go ahead. I didn't mean to cut you
Yeah,
off. Snickers.
you,
Oh.
you asked if I know what it is, and I said the Snickers.
The Snickers is 20 cents, but I would say look, everybody's the guy on the corner is like, here's a Snickers, come get it, and you're sitting there just keep chasing and chasing and chasing, but you're never gonna catch up to that guy. The thing is with a lot of these plays is that people don't understand the flows, right? So it's flows into Bitcoin, then ripples out to altcoins, then flows back into Bitcoin, then ripples out into altcoins. So every time you get a retrace, it's simply support for Bitcoin, and it's more of liquidity driving higher. And a lot of people are like, oh no, it's not. It's just people. Well, you think people are selling and going buying lunch with the money? Like, what are they doing with the sell off? Like, that's not the anticipation at all. It's liquidity rotation, right? It's not people going and selling some of their profits and going and paying their rent. Like there's probably people doing that, but very few, right? A lot of people that are selling are rotating into other assets, and they're looking for where liquidity flows look the strongest. And obviously that's going to be in Bitcoin at the moment because Bitcoin's trend is really strong in comparison to most of these altcoins. And so you'll see liquidity flows into them. People will see that they're overinflated. What will they do? They don't want to sit in cash. They go back into Bitcoin. Bitcoin drives higher. Then they take that liquidity after Bitcoin pops. They roll it back into alts, and they just keep on twapping, 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 twapping all the way up. Right? We need a picture of like the little booty shaking and then the twapping, so that way we can see them like moving this market up to the upside. But it's just a consistent liquidity flow back and forth between
Mhm.
majors and minors, and it's not difficult. Here's the same things, Tommy. The same thing is happening in the stock market, man. The same thing is happening in the freaking stock market, and nobody understands it. It's going where? Between SPY, between Qs, back into Apple, back into Tesla, back into all your major and minor names, and then back into SPY, and then back into Qs, and then slowly that liquidity will start to flow out into really low caps and medium low caps and so on and so forth. It's a ripple effect. Except the people or we'll say the investments that see the biggest ripples tend to see them last because that's the end of your cycle. It's the end of your stock market, it's the end of your crypto. And that's why like most people are chasing high beta with the anticipation of taking 3X's and 4X's when they're missing the plot that there's going to be 50 and 100X's on some of these really high betas, if you're just willing to hold them till the end, right? And you're willing to know when the end is over. Because if you get a 50 or 100X and you're not taking profit, look, I would go see a psychiatrist or go see somebody, and see if something's wrong with you. Because like you should definitely take profit here up on 50, 100X. That's not financial advice. This is just reality, right? You should have learned that in the third grade. But most people are a little too strong headed to look at liquidity as an easy play. But yeah, again, I think it's just simple flows. Bitcoin just leveling up. That's all it is. And you can see right here, you got one, you got two. We actually, I think we talked about this, Jackus. That those green boxes specifically in one of the shows a while back, and we're like, look, it's going to pop off again because that's only two moves. And boom, we got the third. Right, this is the third
Yeah.
move. And now
Yeah.
we'll probably see a bit of a cool down, maybe a run up a little bit higher is what I'm anticipating. And I mean, if you look at that left shoulder over there from where we're at, Jack, it's this where I'm thinking we're going. That all the way to the left for that first, yep, right there. We're basically recovering the flushes right now, right? But if you put that side by side with SPY Jackets, like we're going back to all-time high, guys, relatively soon. Again, I think crypto is just simply lagging the stock market. It's not a difficult play. It's really not a difficult play. People are just making it more difficult than it has to be.
Yeah, equities look good too. I think they are in an interesting spot though for, you know, I'm not really expecting any sustained downside across the board in equities, but we are at that point where the supportive flows are going to stop in mid-January, and we could see some consolidation. I think we could see that rotation that you're kind of inferring, Will. Like you're going to see people go further and further down the risk curve when, you have essentially the leading indexes, the Bitcoin of the stock market, kind of cool down and give people an opportunity to rotate out of it and into super high beta things. I do think that's coming, probably in multiple waves, right? I mean, as the cycle progresses, as we have this high time frame broadening up trend in all markets, you'll probably see that be the case, on numerous occasions where you have, blow off into a consolidation. Beta is going to run aggressively, and then eventually will probably end up happening is the index or Bitcoin will end up taking the torch again.
So, okay, go on, Will.
No, I was just gonna add to that real quick and just be like, it's always been since the beginning of 2023. Because keep in mind, in 2021, I was playing the 4 hour, 1 hour, 6 hour, 8 hour, like because it made sense, right? It made sense. We were playing a range for almost the whole year. Why not play the lower time frames? Because the volatility was there. But on your 2023, after your 22 flush, everything slows down dramatically, right? So your volatility is nowhere near what it was in 2021. And so because your volatility was nowhere near where it was in 2021, what was your best play here? It was to switch your entire play up from the 4 hour, 6 hour, 8 hour, 12 hour, whatever you want to go daily, and start looking at this from higher time frames and understanding where the trend was going from the higher time frame. And this is where a lot of people got lost. They got lost because they stayed on those low time frames to try and depict directionality and couldn't see, again, 500,000 trees clustered together. What's the word for that? It's called a forest, right? It's not called a cluster of 500,000 trees. That's not a thing. It's a forest, and that's what it is, whether people want to accept that or not. And within a forest, there are creatures and everything else, right? It's a big ecosystem. So, what is a trend? A trend is 500,000 trees clustered together. And when you look at those trees and you see a forest that's broadening, aka a forest that is growing, you accept that. And you're like, okay, the forest is growing. When you see a forest that's being deforested, so you're looking at it from the front and you're looking at it on top of the mountain, and in the back end, you can see them start to chop the trees down. Guess what? The trend is down. Your forest is about to get chopped the hell down, right? It's gonna get cut down big time. And then when that stops and you start to see the regrowth, aka the trends start to broaden again, the forests start to grow out again, Because here's the thing, just like forests, we're never going to cut them all down. We're going to eventually stop logging an area because we've damaged it so much, so on and so forth, and let it regrow. The same thing happens with markets, right? It's going to get chopped down, but it's not going to zero, guys. It's just not. Whether people want it to or not, because they want the buying opportunity. Look, if markets went to zero today, none of you would buy. None of you would. Yeah, look at oil. Oil, they were paying you to take oil. Nobody wanted to touch it. But now there's like, "Man, I missed out on the opportunity for last." Yeah, because you were too bearish. You were too bearish. You didn't take the opportunity when it was presented to you, and you want cheaper because you want to get out of your situation or whatnot, or so on and so forth. Your average investor is investing because they want to be a millionaire. You need to invest so you can buy a new car, buy a new house. You need to come down to reality when you're investing, right? Maybe retire at a certain age. Like you have to level yourself. Maybe you get into millions. Maybe you don't. But if you continue to degen, you're going to lose millions throughout your lifetime, or potential millions, because you continue to buy and Jeep for 3, right? Versus getting in, taking the 50, 100x because you were able to identify the trend. But go ahead, Jackus.
All good, all good. Yeah, I was, you know, I had I had few thoughts previously and suddenly lost them. But wait. Um, like I know what I can talk about here, but there was one thought that I wanted to mention earlier. Man, I really need to start writing down notes during the speeches because I do not want to cut people off, right? Like there's always this sort of balance between you do not want to jump into other people's speeches, but if you don't, you will forget lots of it, right? So I really will have to start taking like I really thought about it for like the past, I don't know, 5 months that I really need to create a habit, even like in daily life, right? Whenever I go, and have a beer with my friends, right? I do not want to interrupt them because whenever they are cooking and they are having a thought brainstorm, right? You don't want to cut them off. But if you don't, you will forget what they say. So I was really thinking of taking a like a paper with myself and then writing it down, as they speak, so that I can come back to it later. And I've seen actually, some older people doing that. Like actually, one of our ex-presidents does this, right? And yeah, I think I think I'll have to start doing it. Anyways, anyways, looking at this chart, guys, there is something I wanted to discuss, regarding the SPX correlation, regarding the structure of BTC and so forth. So, and to put really things into perspective, and I see lots of people, uh, you know, trying to call it up all the way since like the breakouts in early October, right? And it's like top, and it just keeps going higher. And like you need to understand once it like sometimes you need to think left curve, sometimes right curve, sometimes try to combine both. But I do not even know if this is left or right curve, but it's as simple as this. We had, you know, you need to sometimes make it really clean and understand the basics, zoom up. And what did we have here? We had 300 days bottom accumulation with this little deviation. Then we had another, approximately 200 days reaccumulation. All of this is one big accumulation below 30K. And we just broken out. So even if we were given some, scary pullback, which I do not think that's the case right here, but even if so, you need to understand that whenever you get such a long base, such a long accumulation, that's it doesn't get distributed so quickly. This is 500 days. I have to repeat this. Even if we were to distribute before the next big higher time frame move, it would need to take at least like this amounts of time, right? And I do not think it simply happens like after all of this. So you either, if you are moving up, you either do that by breaking higher and then making the pullback straight, right? And you keep doing this. Or if you are moving higher in this one little thing, that means you have to distribute at some point. Like if you are going quickly up, there's no big higher time frame retraces. Like this is a higher time frame retrace. This is a higher time frame retrace. This is a higher time frame retrace. Like, but this is not. These are not higher time frame retraces. So if you're gonna keep moving this higher time frame like higher, and so far I have not seen anything to think otherwise, then at some point you will need to distribute and make the higher time frame pullback, right? And this distribution, wherever it comes, whether it being here, or maybe even like above all-time highs, that's possibility too. You do not know, but it needs to take time. And this is the sort of left-right curve. I'm not sure which one is it, but it's one of those. And you simply look at the time. You look at the 300, 200. So basically, let's actually see how much exactly was that. 500 days, basically, right? 500 days, right? That's 3 and 200. So in order to distribute this type of accumulation, that needs to take, at least in my opinion, 200 days for this higher time frame. And then you can make a retrace, but that's further, further anticipation. But yeah, it really needs to take time, and this is not it. This is what 30 days. You do not distribute 500 days in 30 days. That's just not the market dynamics. You can look right here, right? This was the mini bull run, and look how much it took, right? This was 130 days accumulation, sort of, and look how much did one take. It did take at least 90, so that's like 3 quarters, right? Basically, and of this one, and there were still accumulations within, and so forth. So that was the same one here, right? Look at these. These take very long time. These are very longest accumulation. So even when you got this one, right? This was the one that I was saying, that you either gonna get a breakout and then immediate higher time frame retrace and higher, or you're gonna get the 2019 version where you need to distribute sideways, right? And in my opinion, none of these is happening just yet. So just wanted to put things into perspective. I also think, regarding SPX, this is very true that, more or less, you see the risk assets basically, and SPX, like we can call everything as a risk asset. Like I think it's kind of a meme calling something risk asset, at this point, because everything's basically a risk asset, really. And it's really just the terminology that we use. But regarding SPX, I think there is a good structural difference between BTC and SPX, although they do move kind of same, right? But the thing is that I think SPX keeps making these little moves, even if there's something like this, right? And then maybe the recession comes at like a later stage of 2024, maybe 2025. It's possible. I think it does. I'm seeing lots of signs to really support that idea. Maybe, once again, maybe it takes way longer. And maybe in this whole time, we keep squeezing higher on BTC. We'll see. We have to adjust the data as they go. But the good part is that SPX do not really have any structure here. I'm already seeing the potentiality of SPX that, the moment, like the SPX is a problem. If it loses this low, it's in a big trouble. It cannot be losing this low. And I think it's not that far away. Versus BTC is way better structure, all right? Because
I
BTC,
would definitely agree with that.
yeah, BTC has all this accumulation down here. That's way different, right? And so, however high BTC goes, I once again do not think we ever go back below this structure. But because when we talked, thank you by the way, Tommy. When we talked about, you asked Tommy about the ETF, right? And the ETF is getting priced in. It has been getting priced in the entirety of 2023. This whole accumulation is ETF getting priced in, and this is the market front running. And this is very, very important. I think this whole accumulation, therefore, is going to be defended, right? We can. You ask, what do I think of it? Well, ETF is always long-term bullish. It's simply like, what does it do, guys? What does it do, right? Well, it opens the gates to potential. This is important. Potential institutional money. The institutions that are not able to buy with their clients' money BTC or the exposure to BTC. That's what it does. It doesn't mean that they're gonna straight away going to inject that money, right? So we can spend, after the ETF approval, we can spend the next, 150 days or maybe even a year going sideways. We can do some dip, after the approval. Long term is always bullish. Just it just opens really the possibility. It's like, think about that closed playground that you have outside of your house. And if it's closed, you cannot go there. You can only watch it from outside the cage. But the moment they open it, right, you can go in. You do not have to go in. But, sooner or later, someone jumps in and starts to playing there. And the more people plays there, more people will be looking to play there as well. So that's all it really is. And we can even look at the gold. So let me put it like this, right? The gold ETF, which I think is a good, actually, let me put it like this for better visuals. Right, and I think this will do it, sort of, right? And then this is the gold index, right? Going all the way back, to basically 70s, since 71, since it stopped being it stopped being pegged to the dollar, and it became a tradable commodity, right? The gold. But the ETF wasn't approved until 2005, and now I want you to see this. So this is very important, right? So here, actually, let me do it slightly like this so you guys see that. And I would dare to say that the gold would, pump regardless of the ETF, just like I think BTC would pump regardless of the ETF. It's really that it just opens new gates for people to invest in. And it was already going up, it already had the longest accumulation. So it was really just things lining up. And I think that's the same thing happening here. But look, after the ETF, it spent, like the ETF was launched here right at the top, right? And what did we see right after it? We see a pullback. It wasn't that dramatic, minus 10%. Obviously, adjusting that volatility for BTC, that could be minus 30 to minus 50%. Because, as we know, gold is way less volatile. But there was a pullback, right? It was the very top when the ETF was launched. And it's very much likely that we might see either like a delay, denial, something of this January ETF, and then we will see it actually getting approved in March, or who knows, really. It's like, I really wish it's finally behind us, this freaking ETF meme. But yeah, I'm paying attention to the price first of all, not really that much into the narrative itself. The narrative is good, but still, price is first as always. And then, after the announcement, just once again goes, it took 300 days. It may not seem like that on this chart, but this is 300 days of sideways, right? And then it went, in like 6 years, it went, all the way up. It went since the ETF approval. That's 300%. That's like for BTC, that's 200K basically from these current prices. So yeah. And by the way, we do not have to approval it, right? And BTC is more volatile than gold. So if gold went in the next 6 years, if it went plus 300%, well, what does that mean for BTC? It could mean really, who knows? We'll see. But so yeah, I think, as I've been saying, guys, I think longer term ETF will always be bullish. Shorter term, it can cause a retracement, it can cause a sideways, it can cause, the hype will die, and price can do nothing for a longer period. But we always have to pay respect to the price, to the market structure. That's the most important, not the narrative behind it, right? So yeah, some of my thoughts, guys. But,
that's something that we haven't really talked about, is the possibility that this isn't approved in January, which obviously is not what we're expecting at this point, given that the probability of approval is around, I think, 99% right now. What sort of reaction do you guys think the market would have if we are delayed rather than rejected? Just Gary Gensler pulling out the stops. I mean, at this point, it doesn't seem probable. It seems likely that we're going to have an ETF approval probably by Wednesday, but just some devil's advocate here.
I do not know about the probabilities there. Like, I've been hearing that the probabilities were already in October 23, and then I think December or something, and then they kept on delaying. So I really do not care. It's all manipulation, right? That's what it is. They will manipulate the data and so forth, and the news. Looking at the price, it's as basic as this. If it's delayed, we will continue ranging. If it's actually approved, I think, looking at the price here, I think we actually spike higher. Like, probably we do something like this. Most likely. I do not think, this doesn't look like a blow off to top to me just yet, to really like anticipate sell the news even from here. I think the price needs to be, if it's sell the news, it needs to be like, we would need to see something in this regard, like this, and here it gets announced, right, that it was approved. In that kind, I think that's sell the news, and we will see a pullback, and then maybe this is ETF announced, and then we do this. If
that would be wild.
yeah. But if it gets announced, if we are like not doing much until Wednesday, and it gets announced that it's approved on Wednesday with price looking like this, I think that's a straight shoot up, right? So
you think it just maintains? Because the one thing I have kind of been hesitant about, Jack, is with the God candle out of ETF approval, is that, if a market is pricing in something with a 99% chance of probability already, then odds are pretty much most people are already long by that standard. But I have always expected there to be some sort of algorithmically driven pump and squeeze as a result of the announcement.
If you give me like 1 minute, I actually have a great statistic for you, Tommy, there that I plan to write a thread about whenever I get the time. But guys, writing these alpha threads, it's really time consuming. I do not get anything from it, so at least think of pressing the like button, right? And repeating.
Speaking
Listen,
of liking, it's about time I remind you guys to hit the like button again. We're sitting at about 47 likes right now. That's very disappointing. I want to see us get to at least double that by the end of the stream. I know Max isn't here, and I'm the one bugging you guys today. But we definitely would love if you guys could engage with the content this week. It is spot ETF week after all, and we should be smashing the like button, not just caressing it, not just gently hovering our hand over the button. It should be a week where we're absolutely annihilating the like button, guys. This is one of the most important weeks in Bitcoin history after all. So I want to see you guys hitting the like button, and hopefully you guys are enjoying the content.
yeah, so to answer your question, Tommy, this is pulled out from a pretty wide analysis or survey from, I think, like 473 financial, like official financial advisors across US. So pretty deep research. And they've gotten asked certain questions regarding crypto, Bitcoin, and so forth, right? And one of those was, I would like to purchase Bitcoin and then before or after spot ETF, right? And you keep hearing this crypto Twitter or retail narrative that like, yeah, everyone, is going, like, everyone's front running the spot ETF. Everyone is like BlackRock already position. Do you think they will be buying at premium? If they can buy the discount, they will dump the price to buy cheap. Listen, that's not correct. People, the officials, are looking to buy after the spot Bitcoin ETF, not before. That's the pure data. Basically, 90%.
Oh, I agree. I agree with the TradFi managers in general
Yeah.
are 100% underexposed to Bitcoin. And this is a tweet I had, or I might not have tweeted it, but I think I saw a great tweet about it late last week. It was essentially that, crypto natives are probably overestimating the impact of the ETF approval on launch in the immediate term, but also simultaneously underestimating the sheer amount of flows that Bitcoin and crypto are going to get as a result of the ETF. Right. I think there's been this whole rhetoric, and it's both, it's either bullish or bearish, right? It's always the extremities, Jackus, where people are either in the camp of ETF approval is going to launch and we're going to have an immediate God candle from those flows, or it's been ETF launches, Bitcoin doesn't have any flows, and that if Bitcoin doesn't have flows, then it's over. And I think that's just such it's probably the wrong way to be viewing the market, because Bitcoin will get flows. Just because it's not getting, or if it doesn't get expected flows or a ton of flows upon launch, doesn't mean that it's not going to, that those flows in the ETF approval in general won't ignite, some sort of bull run in the market over the next year, and play a huge role. But I also think it's wrong to say that, I think it's wrong to say that I lost my train of thought. Sorry, but essentially, what I'm saying is that people are way too focused on the extremities about the ETF, and I think that what's happened is you probably have crypto natives that are very heavily positioned at the long side in the short term, which is true. But TradFi managers are not positioned yet, and they will become positioned as the usual crypto cyclical process plays out.
Yeah, good thoughts, Tommy. I would agree. Legit, like the crypto natives obviously are positioned, but they pay the hard price of the bear market, of the volatility and of the risk being involved, right? And this is their earn. And because they've been through much PTSD, they simply are not believing this. But the reality is that most world institutions and everyone is only, whatever statistic I look at, all basically says this: only 10% of the world is positioned in crypto right now. And whenever you reach this S curve, right, where you reach 10%, you suddenly go from 10 to 90% of the adoption. And all of these, whether it's financial advisors, institutions, CEOs, whoever it is, most of them are saying we want to get positioned, we do not have the product, and the products are launching. It will not be overnight. If you are thinking in terms of days or weeks, we are thinking wrong. You need to be thinking in terms of months and years of the inflows, right? And this is another good question. Uh, what are they most looking for? And if you look at, most are looking into equity ETFs, spot ETFs, or assets, in funds that do the managing for them. This is like the majority, right? Only very tiny. And look at some of these numbers actually growing down. Looking at individual crypto assets, it's decreasing from 17 to 11% from the previous year, right? So, and obviously, these people that did not know are dropping too, and we see a large um, upside in the crypto ETF. So people are generally looking, like, if you really play this left-right curve, people are looking. Sorry, the institutions are looking into involvement in crypto. They want the regulatory clarity, but they do not have the tools for it yet. The moment these gates are open, it's it's bullish long term. It's always going to be that. It's as simple as this, and you need to keep these statistics in mind. It's very very crucial.
Jackus, I also think people are completely fading, and I want to make the kind of easy play here because I hate it when people do these kind of things, but it just happens. They're fading the fact that a lot of these companies that have been positioning for an ETF are probably not only positioning for an ETF, but are creating, statistical models around Bitcoin, and probably already have had models created, as well as bots, as well as algorithms, and
Yeah,
probably even integrated AI to be able to continue to manipulate slash hold price within these markets. And these market makers have much bigger pockets than a lot of your average whales, right? And I could see them easily coming in and utilizing this space in a way that makes it more like traditional markets, and continues to push Bitcoin higher and higher and higher while everybody waits for the retrace or continues to look for the retrace, against the position of the market. It's really interesting how a lot of people don't understand this, and I think there's a lot of long positions too that are potentially going to probably be closing relatively soon, and they're going to be closing at the worst possible time, right? And I would say, like, if you look at this from a higher time frame and you're looking at this plus Bitcoin ETF plus BlackRock getting involved and all these other things, there's potential that when they're closing their longs, all these other bigger players will be opening theirs, in which
yeah.
case price will will continue to push against a lot of people's anticipation for a pullback.
And what happens, well, in that situation is when you get that range, right? Because as you say, it's some people will be looking to close their positions, while all of these will be looking to enter those positions. So it will be just a switch, and whenever you get the switch, you get the reaccumulation. So that's what can happen, right?
Precisely, precisely, and that was the point I was trying to get to specifically. This is why you're not getting retraces. Like if you look at Bitcoin from 2020 to 2021, it was a very similar situation. You continued to look for the fallback, but they just continued to keep switching positions and pushing price higher and higher and higher.
Yeah, and it was. I have to say that the 2021 pump was just simply due to COVID printing. That's like all major assets basically did the same. Some took longer, some were faster, but it was just COVID printing, and people that did not see the COVID printing being appreciated in the assets, the money expansion or currency expansion to be more precise. Uh, they were selling because price was too high, and we had to make a pullback. So yeah, as you said, it was people switching their positions, and price kept trying to find the fair value of all that new created currency, right? Um, yeah, guys, another one. Do you currently allocate to crypto in clients' accounts only? And look at this, right? So we've seen a growing tendency from like as low as 6% in 2019 to as high as 16% at the top right. And we see these numbers decreasing during the bear market, obviously. And but the thing is that we are sitting only at 11% of the financial advisors or institutions allocations, right? This needs to flip. In the next 10 years, these two numbers, they need to flip, right? That's the big adoption that will take place. That's what makes this. And it's as simple as this, right? You pull out total market cap, and we are currently sitting at like including every single crypto, we are sitting at 1.6 trillion. That's lower than some of these big corporations. One single corporation, Apple is bigger than the entire crypto market right now, right? I think. I'm not actually sure, but
2x higher, 2x higher.
2x. Yeah. So all of these needs to head, to something between 10 to really like 50, like the entirety of the industry is going to have something between 10 to 50 T. I do not know, and I'm talking, this period, like uh, like it's a long period, but in this period, it's heading there. That's the world adoption, and by then, the the opportunity is gone, right? That then the moves will be like SPX. It will still keep on appreciating. There will still be nice moves to make money, but it will not be thousands X or anything. This is the last cycle really of the opportunity.
But here,
For
Jackie,
Bitcoin, maybe I would argue that the cycles in our altcoins are just going to continue to get crazier, because as Bitcoin and
yep.
Ethereum lose their beta over time, you probably see people continue to branch out into increasingly risky altcoins.
Oh,
But
for sure. Just like you have penny stocks that there's always some that do thousands X, right? I meant above
yep.
like the majors, of course, the high caps, Solana, Ripple, if they stay here, obviously, and obviously, Bitcoin and Ether, but the majors, bro.
Jackie, you hit the nail on the head. You
We got a
100%
super
hit the
check
nail on the head.
from Mark, guys. Thanks, Mark.
The thing is, I want to add to this. And I feel like it's not talked about enough. This is almost like buying SPY in the 1970s. And if you look at SPY in the 1970s, look at the move from SPY in the 70s to now. Like, you absolutely made it, right? When it comes to Bitcoin, you absolutely made it. And I think just so many people are not understanding the potential move of liquidity that can occur here. If you look at Bitcoin, it's almost like the bottom of that whole move there on SPY. Like, look at it. Look at the bottom move on SPY. We're like in that ripple phase right now. We veered down, and then we're gonna freaking just absolutely tear. And I think just so many people are sleeping on this move, man. They're sleeping on it based on what? Based on total market cap. It's not a difficult concept. Like,
Yeah,
Bitcoin is the ETF of crypto, guys. Like, people just aren't understanding that. It is the father. It is what is going to push these markets, and that's what's going to pull liquidity into the space and create liquidity for these other coins that'll create the 1,000x's, 100,000x's, blah 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 blah. The potential riches for very few, while a lot sit there and hope. And I think this is the potential fumble that a lot of people are positioning themselves into, not being positioned in crypto. And I think there's a saying, right? First they laugh, then they
mhm,
mock you, then they join you. And right now we're moving out of the mock phase, right? We're moving out of the mock phase. And once they join you, the real liquidity flows happen. And you've moved from the meme to the seeds to the all right, I'm in, right? And a lot of people aren't seeing that. They're not seeing the writing on the wall. When was anybody eyeballing to buy into Tesla prior to Elon Musk? Not a single freaking person out there. That's why Elon Musk bought it, right? People bought, and they say they bought to Elon Musk, but it's not Elon Musk tech, right? It's tech that was created by somebody else. Elon Musk improved on it. Same thing with Facebook. Facebook was created by a couple guys in college. One guy took it, pretty much capitalized on it, and everybody praises him as if he's the creator of it. Again, more and more and more things that are out there in the open for people to see, but they continue to ignore the obvious plays.
Yeah, yeah. Good point, Will, and especially with the SPX comparison. So, like, this is really the scaling you should have, and you need to understand the time frame, right? And like, if people are not able to zoom out and look for the weekly moves, they definitely cannot zoom in, like, see this perspective. Like, they can, like, during this stream, you guys will look at this and think, okay, that's interesting. That actually makes sense. Maybe, maybe not. Maybe you will think otherwise. But the thing is that even if you do so, the next day you will jump back to the hourly time frame and be like, oh my God, this did look so scary. I'm selling. You will completely forget this bias for the next many years, right? And that's very hard because nothing's really happening on this time frame. You're gonna open the chart next year, and it's going to be, maybe we are like up here at the blue, right? Which will look like, if we zoom in, that's gonna look like an insane move. But if we zoom out like this, you'll forget it. And by the way, I hope that this is correct, but it says that the current S&P market cap is around 40,000 trillion, right? And we have to also calculate in the potential fiat depreciation, fiat currency, which will probably send SPX to like 90T. And so, like, anything, in my opinion, it's very reasonable to think that the crypto total market cap should go something between 20, let's say 10, definitely 10 to like 40T is in the next 10 years if we calculate in the industry adoption plus currency devaluation. I think 10 to 20 to 40T sounds like a very realistic target for the next 10 years, in my opinion, right? And you will see something of that kind. And in this time, by the way, this was truly a time of productivity growth, right? And you can see that there were problems, some problems within the economy too. But because the productivity, due to all the tech stocks, due to internet basically getting in, and the information age kicking in, there were really no severe dips during this, right? There should have been, like, in other terms, there would be a some form of probably deeper pullback within them. But because the productivity was going up so much during this time, it just swallowed any downside, and it kept going higher. And that's what can happen legit here, right? Because if you guys remember, even during this freaking zero zeros, there were big, like, in hindsight, it's easy to tell, right? But even in the zeros years, on the change of the millennium, there were lots of big media companies, like the mainstream media companies, that were saying, like, what is this internet? You can never make money out of it, and it's stupid, and who would use it, and and why would you use credit cards and blah blah. Like, we all heard it, right? And
Hey, the credit cards one was a good one. That was a good one, but keep cooking.
yeah, and the price was leading up all the way up into it, right? And people did not, what I'm trying to say is that people really did not even understand the tech properly and what it can bring to their lives and everyone's lives, really. And that's basically the same. Like, most people are asking, like, what are these cryptos all for? What do they do? And I do not know. And as an investor,
They go up.
what? What do
They go up.
and never go up. And they will be asking the same questions around here And as an investor, you do not need to understand all of those. You really need to understand that it's too big. As Michael Saylor basically said this about BTC, it's not too big, to like it reached the peak of being too small to fail, but still too small to make enough returns. Like it's at that very good risk to reward, mm, very unique time and place in history, right? Where it has gained enough market participants, enough attention to really enough strong community to support it, but at the same time, it's still low market capitalization, and that's exactly the times you want to be answering these, even if you yourself just cannot comprehend what the technology is telling you, basically, right? Like even here, you maybe could not imagine all the things that internet will bring, right, in the 90s, or the computers or whatever. And then but you have to acknowledge that there were some younger, smarter people than you that knew, that could foresee what some possibilities it can bring. And you just look at the market structure, and the market structure, that's why I always say that price comes first above anything. And the market structure and the price was telling you, hey, I'm not understanding this, but the market is understanding this, and the market is telling me that there is something more to it than what I think it is, right? And you need to be humble in that regard. And I think that's really where we are sitting right now. So
Let me know when you're done cooking, Jackets. I'll jump in there.
you can jump in. Well, you can jump.
I'm gonna tag you in, man. I'm gonna tag you in. Look,
All right.
let me explain to you guys something. Look, when credit cards first came out, people were so bearish on the thought process, right? They're like, it's debt on debt. Why would anybody take on credit cards? Everybody said that because everybody was cash is king, right? Everybody was cash is king. Now today, and Mark made a great point of this, credit cards specifically have become a major household debt. What does that mean? They've sold to you, they've sold to you the antithesis of having more money than you have liquidity, right? And in that process of exchange, you pay them a return on the money that you're borrowing from them. And the RR for the credit card company is exceedingly high. Why is it exceedingly high? Because they credit check people. They check people to see if they had the worthiness to borrow the money. And if they had the worthiness to borrow the money, hey, these guys are going to be revolving customers of a debt, not of an asset. There's no physical asset attached to this. It's the antithesis of a debt. You are borrowing a debt, and you're doing it and paying these companies billions of dollars a year in returns, right? On that debt, on short-term returns, 30% on average, right? 29.99 on average is what your average credit card person's paying, and they don't care. They don't care. Car loans, so on and so forth, house loan, home loans, all of that is now built on debt. Why is it built on debt? Because affordability is beyond the possibility of you owning any of these assets outside of debting them, right? Most people can't save, let alone most people don't make enough money. And so what do? They sell you the antithesis of owning something, and maybe in 2 generations, you might actually own it, right? And those generations get longer and longer. So people are like, okay, one generation, not even one. For a while, you could get a house and you would own that house before your next generation was born. After that, it was your next generation could own the house if they continued to pay on it. Now it's getting to your next generation might own the house if both of you continue to pay on it. You and your next generation. And this is the antithesis of more and more and more expensive items. And this is why assets, although a lot of people say hard assets are the play, and they are in a lot of ways, especially on short-term flips, um, it becomes less and less feasible to your average person. But I would say this: people again continue to fade the easiest plays, And I would say, like credit card debt, this is how people are fading Bitcoin, right? They are fading Bitcoin in the same thesis. It has no use case. Why would anybody use that? So on and so forth. And eventually, hey, what do you got in your 401k? Well, I got about 3% Bitcoin, 5% Bitcoin, 10% SPY, 5% some Rivian, blah, blah, blah. I got to plug myself in. Sorry. But yeah, so on and so forth, you know. And these are the things that a lot of people just they don't get it. They don't get it. Again, at first they laugh, right? Then they mock and point, and we're still moving out of the mock and point phase. A lot of people are seething, and then they join. I mean, look at how many people are applying to these ETFs, guys. Like, just use just a little bit of the brain, just a tiny bit. All right, you don't have to use much. I know it takes a lot to get up and just put two and two together. 2 plus 2 is a difficult math equation, but you have to look at this from a bigger perspective. Once the join phase occurs, that's what we're seeing. We're seeing liquidity flows based on the join phase. Okay, this is no longer a meme, a joke, a ha ha. It's a crypto. Look, cycles may even be opted out after this. We'll see. We will see. Um, I don't want to be that guy that calls that because I like to stick to what I know as far as patterns, and if my pattern's invalidated, it's invalidated. I'll go with that. I don't care if people try to call me out on whatever for saying things. Like somebody will probably clip this like, see, you said this is the cycles would end and they never ended. And it's like that's not at all what I'm saying right here. I'm saying continue to watch. And if the join us phase truly happens, yeah, cycles may fade, right? They may start to fade or deterioration may become less and less, right? That's another thing that a lot of people don't understand. Because deterioration happened around the same time in the stock market as it happened around Bitcoin. And a lot of people didn't anticipate and or look at that, right? They didn't do either one. And so with these things being said, again, I think people really have to take a big look at this. Again, 1970s is a big spot for SPY, man, and you just zoom out for it. Granted, a lot of people say you can pick and point any spot in the chart, really compare it to any spot in the chart. Sure, 100% agree. But when you've got an asset class that's just now being entered into the market, and you've had participants playing in this asset class for quite a bit of time, 10 years prior to the actual listing of the asset class, like these guys are not in here to play for peanuts. They're not in here trying to pay their rent or buy their girlfriend dinner with the little bit of money they made off of some play, right? They're in here to make money moves. That's what I'm in here to do. I'm in here to participate and make money moves. A lot of people are in here just trying to get by. They're trying to become a millionaire. Well, you can't become a millionaire and think broke, right? If you're sitting there spending your money on Gucci and Louis Vuitton and stuff, that's what poor people do, right? What do rich people do? They buy assets, they buy allocations, they buy things of
Some people
value.
would call those clothing, or would call that clothing an investment. Will, I wouldn't agree, but
I mean, in what way? It deteriorates every time you wash it, right?
no,
Who's
I
gonna wash
agree.
it?
I agree.
It's like buying a Lamborghini or a Ferrari. They only depreciate over time. And I think a lot of people just continue to fade the obvious moves. But again, I just wanted to get on track with, continue to watch this market, guys. I know a lot of people are sleeping, looking for the next pullback, looking for this and that. Just, I keep saying it every show, just shut up and buy, right? Like, just, it's not financial advice, it's just reality. If you're not doing that, what are you doing right now? You're waiting for the 10K pullback? I mean, good luck. Good luck. I don't think that comes. I don't think that comes. I don't think we'll ever see Bitcoin get to those prices from here. Granted, I might get sniffed and memed at later if that ends up happening, but I'm okay with saying that. It's better than attaching myself to some shitcoin and be like, hey guys, this is the future of finance, right? We're talking about Bitcoin here, right? We're talking about the sugar daddy of the crypto space, right? This one's the one that pays everybody's bills, all
The
right? When
sugar
when
daddy.
you when you when the altcoins are looking for strippers to come over, who do they call? They call Bitcoin. That's who they call. All right. Bitcoin brings them over. Bitcoin's the liquidity mover, regardless of whether people want to see that or not. And I would just say, like, you guys have no clue what's coming. It's a metric shitstorm. So when this opens up to like to funds like BlackRock and like these guys have statistical models, they're going to continue to sit there and twat this thing all the way, guys. You guys have no clue what's coming.
They're
Yeah.
gonna keep laughing.
Guys, by the way, since I'm charting today, if there are any comments or questions regarding myself, I do not unfortunately read them. So I would leave it up to you, Tommy and Will, to read them to me. But
For sure. I've been seeing a bunch of people request AAVE. If you want to take a look
okay,
at that, Jackus.
we definitely can. Just quickly gonna mention, 57% of financial advisors are looking to increase their position in 2024. It's out of those that are already allocating to crypto, right? So those that are looking to increase, and the rest is looking to maintain. Only 2% are looking to decrease, right? That this is a self-fulfilling
It
statistic,
is.
right?
So many
And
people don't want to believe this unless the government tells them different. But go ahead and keep cooking.
that's a great point, right? Too many people are simply waiting. Like that's really with anything, right? Like you can people tell you could in the freaking 16th century or so, you could tell people, hey, the globe is round, and they would be like, no, 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 I don't believe it until my king tells me it's true, right? And it's the same still today. People will just not like if you like it's not so long ago. It's actually a pretty interesting story, right? And there was this doctor who was doing a surgeries with his students, and they he found out that lots of his patients they died when they were laying down on in their bed, right? And he was like, why is that happening? So he said to his students and himself to start washing his hands. All right, this may sound like absolute stupidity, but let me continue. And he told them, his students, please wash your hands before you start interacting with the patients. And guess what? The number of the patients that died started to decrease. And he started to share this absolutely amazing new discovery with other people, with other doctors. And guess what? He was the freaking charlatan. He was ridiculed by everyone. And guess how it ended up? They throw, like, the whole doctor community throw him mad because the other doctors were just annoyed for him telling them to wash, like why would I wash my hands? Are you stupid? I do not want to do that, right? That's what they said. And this is not so long ago. This was like, I think, like 19th century or something. So really not that far away. And the people and they drove him, the community drove him mad, and he basically killed himself in the end. Like that's how far it went. And then later on, he was given a Nobel Prize for this discovery, right after he was dead, and his family got compensated in some regards. But I think it's an amazing story because, and he didn't had any research, right? Like a scientific one. He just, he started to wash his hands and saw that his patients started to die less, and that's, all he had, but it was pretty clean. And well, what I'm trying to say is that people will not believe, like, it's very hard for people to accept new ideas, uh, new ways to look at the world, because it breaks their current understanding of the world, right? They simply, and they want some authority to tell them how, as Michael Burry really says that in, this reminded me of the end of Big Short, and he was like, people are looking for someone familiar, someone authority, and to tell them how to value things. And that's really how it is. People just want government to tell them that, this product is safe and so forth. So yeah, and then it's too late usually. And
It's a validation ultimately of
yeah,
maybe most or many people still won't see it as that, but getting a spot ETF is largely a validation for Bitcoin as that it's graduating onto a more legitimate asset or a more legitimate plane of asset classes.
For sure.
Yeah, but you know what that is, right? It comes down to, at the end of the day, a lot of people want to know that their money is safe, and the people that want to know that their money is safe are not risk takers. In which case, those are the same people buying shitcoins that think they're gonna become millionaires. You don't take risk. You don't take risk. Why? Because you're scared to invest early. You're scared to get in until somebody can tell you, hey, your assets will be safe if you buy this. When in reality, if you put more than, I think it was at is it 250,000 in a bank? Yeah, I think it's 250,000. FDIC only covers up to that. And a lot of people don't even know that. You know how many people, like, I know millionaires, I know billionaires who don't know and don't understand that the bank will only cover $250,000 if they want to. Granted, the Fed bailed them out, but
And
it's like,
there's another thing to this flow, and that's that they will not pay that amount instantly. Even this is what lots of people do not know, and that's probably what's holding the system stable. But they do not know that even if there's an insurance, like in Europe, we have way larger insurance than you guys, right? So we actually, during the Russia outbreak, we had the Russian bank, which was, by the way, very solid. It was very good, right? It was doing just, it was outperforming most of the other banks. But when there's a run on the bank because people got scared, because of the Russia invasion, they just simply did a run on the bank and the bank in Czech collapsed. It's working elsewhere in the world, but in Czech, it collapsed and died. And the people that had money there, it was insured. That's true. But what people do not realize is that this money is not paid instantly. Like let's say you have 100K in the account, it doesn't get paid instantly. It starts to get paid by certain monthly amounts. And before you get paid this, like they can even take 50 years to pay you all of that. And before you actually get paid, that currency is worthless because of inflation, right? And this is another aspect to this. So not only, as Will is saying, in US you guys only have very little amount insured, but at the same time, the time to pay that insurance is very long, and that's very important aspect.
No, you're definitely right.
Yeah, I wasn't sure if Will wanted to add something to it because I sort of cut him off there, but but yeah, look at the statistic, guys. 65% are is do not want to, or it's preventing them to invest in crypto, right? Or making their first allocation. 65% because of regulatory concerns. Once all this shit, and that's why I say that I think the XRP case is one of the most important ones. Even if you hate XRP, which I totally understand, you still want them to win, right? You still want them to win because that will set the precedence for all the other cryptos. And once the regulatory concerns aren't there, once you have the spot ETFs and so forth, all of this liquidity starts coming in. And as I said, it doesn't have to be day one. This is like a yearly rotation. But that's why I say that this is the higher time frame reaccumulation. This is really the last accumulation. This is the 70s. You guys are too zoomed in. This is the 70s right here. Those prices, unless listen, unless there is some complete black swan, and black swans are what they are. They are unexpected things to happen, like FTX, right? So, and look what FTX did, right? The second largest exchange, trillions of money, and it only cost like what, minus 25% or something? Come on, get out of here, man. So I have no
Because they had
idea.
no coins to sell.
Yeah,
they've
that's true.
been selling them all. They've been selling all their customer deposits already.
Yeah, that's true. That's true. But yeah, the basic thought, guys, is that something to cause like a minus 60% drop, from and I'm using higher prices, right? So to something cause that kind of pullback, I do not know what would have to happen. Like COVID was really once in a
Jackie,
decade. situation.
Can you pull the pullback from here to 10K? What's the percentage drop here?
To 10K?
Yeah, and I'm not entertaining. I'm just one of them.
77%.
So do people think Bitcoin's going down 77% from here? Like, come
And
on.
if that happens, then altcoins
Come on,
are
man.
done, man.
No, listen, now that you said that, well, it becomes so laughable that some people still think that because we never had a bear market, then having a higher time frame rotation, and then having another bear market, right? Like
Bro.
this would even extend this would even extend this drop. That's how unrealistic the 10K is right now, right? So I think like at max, if there's a black swan, uh, at max, like you could get maybe a week below these two lows. But I still do not think so because I think this accumulation will be defended. But yeah, this as I've been saying earlier, guys, this is the big reaccumulation. Once all that money starts flowing in, once there are no regulatory concerns, this is a big reaccumulation to take place, and we will be, this is going to happen. But this is the last opportunity to really buy in cheap, I think. And as you said, Tommy, I like obviously, as the industry will flourish, there will be new low cap coins that will just do still like insane returns. Okay, I'm talking really BTC, Ether, Solana, Link, and all of these, right? Those are, I legit think, like, I'm not sure yet the year, but I think we are like you know early on the Amazons, like we are somewhere here on these.
Well,
So
I think somebody. Oh, go ahead.
I was
yeah,
just gonna say it's been interesting to see that, even though we were right about the expected returns on Bitcoin and ETH being lower, but you haven't seen any cease of, I would say you've seen way more degeneracy over the last 3 or 4 months than any bull market cycle in crypto that I can remember outside of the spring of 2021. I would say participant behavior is very, and we really, we've had sectors popping off in so many different areas, but if you don't have your finger on the pulse of those areas, you're probably getting distributed on by astute rotators, right? It's been very quick rotations, but what I'm trying to say is that there's been no shortage of things that have pumped as a whole, and no shortage of people willing to go down the risk curve on something like Solana. I mean, look at everything that was pumping on Sol, even somehow almost as degenerate as what we were pumping on ETH last spring, right? I remember having a conversation with our Discord members, and guys like Will were in there just finding shit coins over the weekend that we could potentially ape into over the next few weeks. I know you remember that, Will. But yeah, no, I mean, there's just there just hasn't been a decline. There's been an increase, in my opinion, as far as like participant degeneracy, even though Bitcoin and ETH are trading less volatilely than probably ever, which makes sense, right? People are chasing that volatility somewhere else.
But the thing is too, and it's the promise of wealth. That's why I think a lot of that chasing happens. But um, and we capitalize on that, by the way. We definitely capitalize on that. The point, because you got to understand, when you're being sold coal and when you're being sold gold, both can be shiny at times. But one's shiny because it's hot, and the other one's shiny because it's actual gold. And I think that when it comes to these markets, people are used to seeing the same patterns, and so they adapt to those. And I think the lack of understanding is the lack of ability to adapt, right? To adapt to markets. What I mean by to adapt, and this is what our team does the best, we adapt and we change when the market changes and adapts, is they get into these patterns where, like right now, everybody keeps on saying that because the altcoins are popping off here and there, that signals the end. But that hasn't happened since the beginning of the last year. And because that hasn't happened, so many people just keep on calling for tops, right? They keep on calling for tops. They keep on looking for the same patterns as 2021, but it's not the same. It's not theoretically it's the same. What's different? ETFs might actually get approved this cycle, with anticipation, so on and so forth. More people are stepping in on the ETFs. More people are interested, so on and so forth. And then in addition to that, social media, so on and so forth, is more fluid than it used to be. And that's the one thing a lot of people fade. They fade the ability of technology to push assets into the view or the purview of people that have never been invested or never been interested in investing. I mean, for some people out there, Bitcoin is their first investment. For some people, crypto is the first time they got into the asset class. And a lot of people don't understand what that's like to be that person, right? They only understand the traditionals and the stock market, and they're like, well, because I don't understand that, I shouldn't touch it. And that's always the wrong approach. Because people didn't understand the computer, they should have never bought an IBM. Well, if you bought IBM, you'd be a millionaire, with hundreds or thousands of dollars in investments and so on and so forth. If you bought Apple with the antithesis of everybody having a cell phone, right? Not just a cell phone in a home, but every individual having a cell phone. And for house phones to actually be completely faded out, you would be up up to thousands of X's, right? And it's understanding when technology is exceeding comprehension, right? And Bitcoin and crypto is that it's technology exceeding comprehension. And most people continue to fade it based on the fact that they don't understand it. Well, why don't people sit down and read the white paper? Again, people tell them that all the time. They'll be like, well, I don't understand this gibberish. We'll get somebody who can, right? Um, and understand what blockchain does and how it works. I can tell you this, one of the biggest successes, and this is one I like to point people to whenever they think about blockchain, is AWS. And a lot of people don't even know that exists, right? Probably people on the show do, but a lot of people out there don't know that Amazon's biggest moneymaker is their web services. It's not at all the Amazon store and selling and shipping. It's the web services themselves. The top 500 companies are hosted on AWS, right? Most people don't know that either. So AWS isn't going anywhere. What is AWS technology? It's blockchain technology. That's what it is. What is crypto? Crypto is blockchain technology. Like, you have to understand assets and where they come from and the technology they provide, and understand when something is providing a service, when something is providing liquidity, when something is providing value, and when something's just something that's going to go in the wind. Again, when you move through the phases I discussed earlier, and these are the three phases, these are the ones that you always want to pay attention to. You don't want to miss the when they join us. You do not want to miss that one. It's the first they laugh, then they mock, then they join.
Well, when you talked about IBM, what's also interesting is when you pull out the chart, right? And sometimes, guys, like this is how the chart looks, but you need to understand that some companies are not growth stocks; they are also dividend stocks. And there is a cool feature: if you actually double click the price, you can adjust data for dividends, and it paints completely different picture if you do that, right? This is how it looks without it. It's completely two different charts, basically,
Wow.
right? So I think this is very, very helpful to think about whenever you start purchasing. I'm actually, wait,
Remember, before computers were at homes, Jackus, they were only for dark web users and people trying to hack your bank
yeah,
accounts.
yeah.
Now every home has them.
This is, for example, our energy energy company in Czech, right? We supply Germany with energy, and we do that through chess, basically. And this is without the dividend, and this is with the dividend, right? So some companies, because they just have a lot of income, they instead pay the dividends. And yeah, so just a cool feature. And anyways, guys, eighth, right, is the one you wanted to look at me in. So my take is that we still need to flip this resistance into support on the weekly, as I've been saying on Twitter. Once we do, it will really start flying. But for now, zooming in, we had a pretty nasty rejection. The market structure hasn't been broken really just yet. Like it needs to hold here, just like I've been saying. Lots of these odds need to hold here, but as long as this one is holding here, so yeah, it's really if like, but it's still hard though, because let's say we should be holding here, right? We should be holding this little range and then break higher. But let's say we break lower, I could still see where they like sweep these lows and then turn it around. So this one's really tricky. I think this really shouldn't be pulled on the daily because there is just so much support right here. But yeah, if on the daily this low is lost, what may happen is that we may be going all the way to retest these lows. It's a really tricky one. I think we're gonna break this resistance at some point, but it can take a little longer. We'll see. We'll see. Kind of messy chart, to be honest. The only
All depends on
level
E.
and
All
all
depends.
depend. Yeah. That's a fucking great comment, Tommy, because lots indeed depends on ease, and that's why I keep reminding. Like, you guys are laughing on ease. I keep on charting ease because it gives me the proxy, and I know that at some point ease is going to 3,600 and higher, right? Like 10K is programmed for ease. So the moment it starts going, I know lots of these alts will start to outperform and do better, and it's really the time to shut. So yeah, yeah, I think this resistance needs to be broken, and you either wanna front run it cheap, but there is a risk to it, or you wanna wait for the breakout, but there is a risk of missing out as it doesn't pull back, right? So there's always that. You either anticipate early, you get a cheap entry, but there's a risk of reversion, or you wait for the confirmation, just like lots of people waited on BTC, for example, right? They were waiting and they missed this. They missed this. So there's always there are always risks. But what you can do sometimes, what I recommend people is go half and half, half in now and half if we flip. That's the way. If we dip lower, you have liquidity to buy cheaper, and if we go higher, you profit something. So there is never a certain way to do this. It's a game of probabilities, really.
Always is. Well, we've been going
Yeah,
for.
Jackus, I just wanted to add.
Sorry about that, Will.
Oh, go ahead.
No, I was just gonna say we've been going for a while. If y'all are about ready to wrap it up, but if you're still trying to cook, then I'll let y'all go for it.
No, I just had one more thing to add because I know there's been a couple comments about it and asking. XRP, I personally think it's in a compression stage that's going to blow out to the upside, but there are a lot of questions around it. It looks like a
I
giant
know.
pennant. It
It's
looks like a
because
giant pennant.
I have this XRP alpha, but as I said, guys, I'm only going to share the XRP alpha in the Discord. So you can use that using the link in my bio if you want to join in. It's absolutely going to be worth it. I think alongside many other things, it's really a steal though. But and as far I do not know what the comments are. I haven't read those, but at some point Ripple will, in my opinion, win the case. And just like with Binance, right? The moment really all that Binance drama was gone, we started to see BNB pick up. Like I think it's different with XRP though, because like if XRP wins, it's just skyrocket. With Binance, it was really about the it didn't fall to zero basically, and even that BNB started to outperform right at that point. So but with XRP, like if they win against SEC, it's a skyrocket. But the question is when, how, uh, and so forth, and the probabilities, DIYs, and so forth, and those are like I cannot share publicly. Yeah, that's
And then
what
BNB too. BNB's. I did want to talk about that one just for a second, and then we can kind of close things out. I thought that was pretty interesting. It closed exactly like I thought it was, and that was CZ step down. Like nothing substantial happened to the exchange itself.
yeah. We talked about it sometimes here too, guys, and it basically played out. We even
Yeah,
discussed
so
the
many people were
problem.
looking for that systemic collapse that just never came. It just never came. I kept telling people too. I was like, just don't leverage short BNB. I was like, if all the assets out there, just don't short
Never
BNB.
short BNB.
Man,
Never short BNB.
yeah, never. The Godfather. Guys, what do you guys think of this? Right, it's looking actually pretty amazing. This SR flip.
Looks good.
Yeah,
I
I know
wonder.
that.
I almost wonder if they're going to do a fake out and then rip it again later in the week.
You mean like fake out lower,
Yeah,
or
like a
vice
fake
versa,
out,
or
not a
higher
huge fake
and
out, but like wipe the weekend longs and then run it right back into 49K. I could see that.
yeah. It really seems like I thought we will have even longer reaccumulation here, but it seems like I thought maybe we're gonna get something more like of this kind, and we like here we would do this, but with the alt carnage over the weekend, I do not think that's necessary anymore, and I think really we are pressing higher again, and I can once again say I told you so. So even with this dip and then the early open hold and the upside, although I was thinking maybe we would spend more time here, but essentially it's played out really well.
I mean,
And
go ahead. I didn't mean to cut you off.
yeah, and I I do agree with Tommy. We could see some, especially after we take out this high where you can like with these setups, right? You already know where the bears will be aping. Like you know the setup, right? You know this is their setup, the bear setup. This is what they did, and they were targeting the low. And the low is not liquidity. Liquidity sits right here. This is liquidity. So it did go there. If you miss that, this is your stop getting triggered, right? It's where the market makers are reaching for. I could see like where we sweep this maybe do like a decent one, like something of that kind. But it really seems that we already got the fake out high. We had the fake out lower. Seems the accumulation is long enough. It's really looking like we will be pressing higher. We can do that still by doing this, right?
Yep.
Like this can happen.
That's what I was gonna bring up is that we could easily range here for a bit longer before we see movement.
Yeah, and this, by the way, tells me that probably I'm not sure what the ETF decision is going to be, but unless we are really like pumped, like unless we are like 53K into it, into that announcement. Is it really on Wednesday, the deadline?
Probably early Wednesday.
All
You
right.
would have to imagine.
Can it be on Friday?
I wouldn't know enough about it to answer that question, but I guess it could be on Friday.
The biggest
I
thing
think
for me,
the date that they've had earmarked, though.
Well, really, it depends. So if like the announcement is given some, but you will see that the price, it's always like that. The price will, it depends when it gets released. Is it going to get released when we have pumped into it? Are we trading 53K and it gets released? Well, most likely, we will see some of that retrace. Are we ranging here, and are we here at support, right? Like, have we done this reaccumulation and we are sitting at support? It gets released, well, instant pump. So that's what matters, like the timing of the things.
Mm-hmm.
You know what would make me really bullish here is
Jesus,
if they
imagine.
slept below the range there again, like they did previously with that wick there,
Yeah.
and then really faked a bunch of people out to the low before they absolutely ripped this thing up.
That's what I was thinking, Will. Like, we could see a sweep of that wick at 42.5 and then just literally V recover to 50K. I could absolutely see something like that.
Do you see what's going on, guys? Do you see that? Do you see the instant
That's
vertical
what we call
accumulation?
accumulation, Jackus.
Yeah.
But nobody sees it.
The wedgeor.
Easiest plays, bro. The easiest plays. Like I don't
So
even know how people look at this and be bearish.
this one actually I was calling live, right? When I was saying on H4 we are front running possibly this support that they are looking to buy, and we hold this. So I think we could actually be entering this one here, where I think they might front run this high. They will retouch this one. So like they go higher, come back to this high, and that's here, and then there is the further movement up. But yeah, as I've been saying to you guys, my main play is being bullish until I see something bearish, and I have not been seeing that. When we are up here, I was saying they might rinse it. Down here, they did so, but they held the yearly open, they held the structure, so nothing, giving me the vibe of distribution just yet.
Yeah, they probably already got trap shorts at the moment, but they could trap more. That could always happen, right? I think that's more of a hope than a reality. Once you get shorts trapped, you just let them continue to think that there's a possibility that they can get out of it, so they just continue to add, and then you completely just rip them. And you saw this on the long side coming down too when we were coming down in the market for Bitcoin. Like you saw a lot of people, they would hold support within a range, made people think that the 30K was going to hold, and then absolutely nuked it down to 20 and destroyed all the long side OI on Bitcoin. Coming down into the bear market, and then you saw the bear accumulation happen below the 20s, right? When a lot of people were anticipating deeper, and they continue to hold and hold and hold. And I think a lot of people shorted at the bottoms, guys. Like I think a lot of people shorted down there. The FTX collapse, there's probably so many shorts there, and they absolutely destroyed through that liquidity zone coming back
A lot of
up.
TradFi shorts for that. A lot of CME people got a lot of CME people fueled our run off the low in January.
Yeah. Yeah, and look at this gap, right? They only touched the opening, but they left it, and that's why I think also we come back later to it. And that's what we discussed live when this happened, is that they leave it open, and we can keep climbing higher in the meantime.
You know what that gives me confidence in, especially if they never come back for it, Jackus? That gives me an area of liquidity to look for when the bear market occurs again, right?
Yeah, yeah,
And that's what I tend to mark these out for. I don't tend to mark them out once your trend is already up to come back and tap all of them. I continue to mark them out so I know where your levels are coming back down once the the real OI flush starts to occur in the market, right? The people that were long since 50K, 40K, it comes back for them later. And a lot of that is really good alpha to really kind of continue to keep on your charts and pay attention to, because those liquidity zones tend to get filled.
Yep. It's useful to kind of make a mental note or an actual note of where funding started to get hot, and usually we will come back and revisit those levels.
Yeah, because they want to test those.
Will, are you saying something? We lost you.
Cut out there.
yeah. You did cut out. Will, you with us? We don't hear if you're talking.
Well, you got yes. I think my VPN cut in on me, but we come back to touch those liquidity zones later and so on and so forth. But yeah, that's where I got the lows where we came back to with Bitcoin in the original bear market. I was looking for those same liquidity zones across the board, and we hit almost all of them, every single one of them, right? Deviated below them, and the thing is too, just how Jackus has it marked out there. Jackus, you see those lows from Bitcoin where you marked them out. So if you could drag that line, that bottom one you have, no, from the 2021 upper market.
I was just gonna say what's his token, that this is Ether, not
Yeah,
BTC.
yeah, no, that's fine, that's fine. So drag that line straight across to the right, not that one,
But
the
what
one
do you
up in
want me to do? What do
the
you want me to do?
upper range of the market, and right around 1200 or 1100, I think it was.
1100.
Down one more.
1100.
Your
Yeah, right
line,
here.
your line. Yeah, right there, right there. That that line that you have to your left, more to left, more right there. Yep, that one. Drag that all the way across. So if people were to take a look at this line and you were to deviate below that, the second you went back above it is a bid, right? And then same thing on the next one. So you deviated below again, but you created a higher low. And then the second you went back above that, that's another bid. You can continue to bid above that liquidity zone, and you would have been in the most optimal zone for Ethereum. And this is what a lot of people didn't do on the way down. They didn't buy they didn't buy these liquidity zones on the way down. They
I
were just
did.
buying in random areas.
I did.
Well, I'm just gonna say a lot of people, right? A lot, as in 99% of people, they continued to wait for the bottom rather than looking for where liquidity lied the most and taking bids at those positions. And this is like positioning over leveraging. And there is opportunity cost in that time period, but I think like positioning at these key positions, if you have a portfolio that does have accumulation on its name, right? Not trading. These are your most optimal zones. Those two lines that you drew out there at the bottom were your most optimal zones to be looking to purchase Ethereum. And I think Bitcoin had very similar structure at its lows too, where it was in a very similar place where the lows were in the same zones where liquidity lied, and a lot of people just did not want to bid those zones because they wanted lower. They wanted to all in one position, which is absolutely the worst possible thing you can do in a market. You never all in because you think the bottom is in. You never all in because you think the top is in, or all out because you think the top is in. Like you have to dial in and dial out, and you need to do it at key high time frame liquidity zones.
The knife catchers.
Yeah, the people
I
think,
can
oh, I can call the bottom. No, you
I can
can't,
think of a few people who tried to call the bottom multiple times in 2021 or 20, no, not
bro.
2021, 2022.
22, 22. There were so many bottom
I
callers all the
won't
way
name
down,
names, but I can think of a few of them.
bro. I had people tell me I was stupid when I told them it was going to break 30K. Like literally, tell me I was dumb, and I was
Same.
like,
I
okay,
remember
keep
that,
watching.
man. Yeah. It was pretty obvious to me that it was going to break 30K when we got into that like redistribution range pretty much all spring. I kind of knew that they almost tricked me though. They almost, like, the Do Kwon pump almost tricked me out of my bearish bias, and the rhetoric around that was pretty funny at the time. You were looking for Luna shorts, but everybody was
Everybody was
back in
long,
the
bro.
Do Kwon was going to buy us to all-time highs, man. but it was just
Everybody was max long, and I was shorting
oh,
Luna.
Binance whales were just using Do Kwon as exit liquidity.
I was like, everybody's max long. I'm max short. Fuck this.
You know the crazy part about it is that Do Kwon might have actually made, even though the Bitcoin buys got nuked, he probably made a lot of money from that pump because Luna blew off, another 50 to 80% or something like that. And so his Luna, his stake in Luna probably went up a ton, but he didn't care that he had to sell the Bitcoin for a loss and nuke everybody's net worth a few weeks later. He does now that he's in jail, but he probably didn't at the time.
I still think that his intentions were good. Doc ones. What do you guys think?
I like the idea of a decentralized stablecoin, but he cashed out a lot of money, man. He cashed out a lot.
I mean,
Bro, I heard he
I mean,
stole like a ton
there's
of the
there's
Bitcoin.
nothing wrong with cashing out, right? I think like you wanna like I do not know how much, and I'm not trying to defend him. All right, I myself lost lots of money in Luna too. Like I made more than I lost, but I like on that drop I did lose some, and but I've been around that saga for a while, and I legit think that his intentions were good. He just his ego went over the roof, and the product just wasn't as good as so many of us thought it was. Right? I'm having a hard time thinking it was an intentional scam like FTX since the beginning.
Well, here's the thing with me, Jackus, and I wanted to add to your context here. I know what you mean by. I don't think it was intentionally a scam either. I thought his product was bad, and I'll tell you why. Because I think a lot of people, and this is what I told people in 2021. When you're attaching an algorithm, right? Algorithms can be read and understood. When you're attaching an algorithm, especially something open source, to a product that is highly volatile, to a product that is supposed to remain relatively stable, all it's going to take is a little bit of rippling in the liquidity to get those to kind of like depeg, right? And or screw each other. And we saw people do that in 2022. They literally depegged the two and got the stable coin to be unstable through volatility, by playing the algorithm right at the high. That's what they were doing. They were not just like flushing it trying to kill the coin. They were trying to depeg the two assets. And they were able to succeed at doing that, which means there was a flaw in his algorithm, right? If there wasn't a flaw in his algo, then they wouldn't have been able to exploit it. But there's always a flaw with algorithmic anything. When
Yeah,
you
yeah, but
attach two
the thing
assets
is,
with.
well, sorry to cut you here.
Mhm.
And I agree. But like what I'm trying to say is that like you never know. If it did not happen, it would like be awesome, right? To this day. Like if there was a flaw in Bitcoin and it would die after 5 years, everyone would tell you like it was so obvious, such a fucking scam, Bitcoin, and there was, it was obvious that it would fail, here and there, and you know what? It could have happened, and there actually were bugs in the Bitcoin protocol that were fixed after all. There were bugs that would just kill the entire thing, but they got fixed,
Well,
and
Bitcoin has securities in
unfortunately,
place, though,
yeah.
right?
Wait, what?
Bitcoin essentially has it has safeguards. Like it has the adjustment periods every week. It has the halvening,
No,
so
but
on and so
but
forth.
but there were okay. I'm not such a technician guy, but from the technician guy that I listened to, they
Hmm.
said that there were bugs in the code that if they were not agreed at the early days by the community, then Bitcoin would legit like fail nowadays. But because they were fixed early on, uh, without the notion from the white community or like the mining community agreed and it like updates and so forth, so it got fixed. And don't quote me on this 101, but it was something in that regard, right? And the same thing, what I'm trying to say in terms of Luna is that it like obviously now in hindsight we know it was badly designed, but at the time it seemed like it was pretty decently designed. It survived the crash of May decently, and if some of those bugs were like if the design, like that's the beauty of a market because it tells you what is well and badly designed. But what I'm trying to say is that I still think that like his intentions, and again I say that as one of the guys that lost money there, but I still think that his intentions were not bad, or like he actually
No,
thought he
yeah,
created something great.
I wasn't necessarily pointing at his intentions as much as was I think his idea was flawed, right? Like I think attaching a stable to a volatile asset through an algorithm is easy to exploit. That's I guess that's kind of
Yeah.
the area that I look at specific. And this is what I told people in 2021. I mean, there's people here that are present that were there in 2021 when I told them, hey, this is exploitable because you're attaching an algorithm which is readable, right, on any chain, and you're attaching an algorithm to an asset that is stable and an asset that is unstable. And all you got to do is ripple the unstable side enough to where the stable side becomes unstable. And then once they start matching each other and start becoming unstable together, then you can trickle them both down to zero essentially. So just like pushing it up, which it was very easy to push up the same way, you could drop this thing just as easily. It is basically like a Ponzi essentially, or not. I'm not saying he tried to necessarily create a Ponzi, but it was like a pyramid scheme. So like it would take from one side to push the other side up, and then people would buy because the side would be going up, and then it would take from the other side to push the other side up, and then people would buy that side to push that side up, and it was just causing people to FOMO into and FOMO into and FOMO into until what? Until there's no liquidity to take out anymore. Once there's no more money to topple this thing higher, you can't play with either side, and at that point, it's just a tumble back down, right? And then from there, it's just like a dump into a dump into a dump, and that's what we saw, right? The algorithm was able to be gamed to the downside, just like it was able to be gamed to the up.
Yeah.
It's a very intriguing conversation, guys. I think at the end of the day, the mechanics of the system were designed for a constant flow of money to continue the Ponzi, and eventually the Ponzi just got so big that we didn't have the inflows to be
I
able
think
to
it got
support
bigger than
it.
what he expected, to be
I
honest
Yeah.
with
think
you.
Well, when he
the
added
real scam
Bitcoin,
there was with USD with the 20% on Anchor. That always seems suspicious to me, right? Like if there wasn't and obviously that may have been the bad part about the USD, because like the USD and Luna itself, it did make sense to me, and maybe the algorithm could have been fixed with something like like timeouts of selling. Who knows? Who knows? Okay, I'm not a technician guy here, but like they attracted people to the protocol with the 20% APY. That was
That too,
really,
yeah, that's true.
like, I was always questioning myself, and there were countless of threads on Twitter explaining the 20% API. Where is that coming from? And they sounded pretty convincing. That's the hard part. That each time when these things happen, they are pretty convincing. But I always, like, my inner feeling. I do not know, but I have these inner feelings in terms of markets, and I always had that inner feeling with the 20% APY on Anchor. That one did seem suspicious to me. I gotta say, and they probably used like really weird mechanism to get it right. They used it as a marketing tool to really bring people to Luna. That was the real Ponzinomics, in my opinion. There, looking back.
yeah, I think it was the fact that you could hold an asset and then gain an additional 20%, allegedly, a
Yeah,
year, holding the asset that people found so attractive. And when the asset is going up as much as Luna was going up, it is very attractive, and we'll probably end up seeing something very similar with Ethereum one day, right? With rehypothecated coins, though it'll be under a different name. So they will avoid the same mistake, quote unquote, but it'll still be present. And I imagine that the eventual Ethereum Ponzi that takes down the market is going to be just gargantuan, right? And we've heard people talk about it, even on this team. Wabi's talked about it before, Eigenlayer, numerous other things that are like restaking, LDO, all that good stuff with staked ETH will eventually probably be a problem in the market at the top of the bull market. But for now, it's it's a feature, not a bug, which it was a feature for Luna rather than a bug before it eventually blew up. But guys, we've been going for about 2 hours here. I think it's probably a good spot for us to wrap up the show. We appreciate you guys so much for being here. Hope you guys enjoyed the content. We got a great start to this ETF week with a very long and a lot of good content in this show, quite frankly, guys. So yeah, we hope that you will make the shows later this week. A reminder to hit that like button on your way out if you haven't already. Last time I saw, I think we were at, let me see exactly how many likes we're at, so I know if I can praise or kind of scold you guys. We're at 85 likes. I did say I wanted to get to something like 94, which was twice what we had at the time. For 2 hours, I think we could have gotten more likes, guys, but it's okay. We didn't have a full panel today. And I'm gonna set it. We're gonna set a target for you guys tomorrow or Wednesday. One of these days, it'll probably be the Bitcoin ETF day though, because that makes the most sense. We're gonna set a pretty high target for you guys to hit with that like button. I think the algo is starting to enjoy us. But this is Market Check, guys. We are live. Eastern time, we are live 10:30 to 11 a.m. Eastern time. That's generally when we go live, right? I mean, these shows tend to last anywhere from an hour to 2 hours. But we're here every day, every morning, sharing you guys that big juicy alpha. Wabi has market talk at 4:15 to 4:30 Eastern time. That's the start time, not the not the full show time. We typically get started around whenever our Giga Chad calls wrap up in the afternoon, but that's usually 4:15 to 4:30 Eastern time. And of course, one last shout out to our show's sponsor, BingX. We have links in our bio as well as our Twitter page to get signed up over there. But yeah, guys, y'all have a great rest of your Monday, a fantastic rest of your week. It is a very big week, in the words of Barry Silbert. I'm gonna over abuse that saying this week, so get used to it. But that's all from us, guys. Have a great rest of your week, like I said.
Mark.
And we'll. What was that?
Mark just put out a also great comment. Sorry to cut you off.
Boom. Was the best show that he has seen. We love to see it, guys. We're going to be bringing you guys some great shows this week, so make sure to continue tuning in.
Also, Mark, you contributed twice the super chat today. We do appreciate it, by the way. I just noticed.
We do love Mark. Thank you, Mark. I'm glad that you enjoyed the show so much, man. Like I said, we are going to be having some banger shows this week, I'm sure, in the wake of the Bitcoin ETF. But yeah, no, that's all from us, guys. Thanks again, and we'll be back tomorrow.
The outro.